Hello everybody and welcome to our accounting quick hit on the topic of closing entries. So by this time in our discussion, we've already worked our way up to the adjusted trial balance. That data has been used to compute the financial statements, and now we're at the closing entries. We're trying to start the next period with zero balances for many of our accounts, but not all of them. And to zero those accounts out, we have to do closing entries. So the first question to ask is, which of all of the accounts do we need to close? So we have a couple of different categories of accounts we're going to talk about. First, we have what are known as the permanent or real accounts. And then second, we have the temporary or nominal accounts. Those permanent accounts are balance sheet accounts, which include the assets, the liabilities, and most of our equity accounts, the capital or common stock, the retained earnings, but notably, we are leaving out the dividends account itself. That is not a permanent account. It will not keep its balance from period to period. The temporary accounts are all of our income statement accounts like revenues and expenses, and as I just mentioned, the dividends. The goal of our closing entries is to close all of those temporary accounts out to retained earnings, leaving the temporary accounts with a zero balance, and the amounts have carried forward to a permanent account in retained earnings. So we have a couple of different options for how we can do this. Option one involves the use of an account known as the income summary account. It's an extremely temporary account that only shows up during the closing entries. And this option one, we close revenues to income summary. We close expenses to income summary. The income summary account itself gives us a subtotal, basically representing net income for the period. It just gives us that amount, just like the income statement would. We take that amount, we use it for informational purposes, but then immediately we close the income summary account to retain earnings. Then our final entry there is we close the dividends account to retain earnings. Everything ends up in retained earnings, all the debits and credits. Option two eliminates that income summary account, and we close revenues to retain earnings, close expenses to retain earnings, and then close dividends to retain earnings. Now, when we talk about closing an account, we're basically referring to zeroing the balance out. So revenues, by their nature, they start with a normal credit balance. That's our starting point. So the journal entry to zero out revenues must involve a debit to revenues for the exact same amount. So we're going to debit revenues. That leaves us with a zero balance in the revenue account as we want. And the credit to that entry, again, was to move it over to retain earnings. It already had a credit balance up to this point. That's the normal balance of retained earnings. We are adding a $1,500 credit. That's our second piece of our revenue journal entry. The expenses start with a $1,000 debit in this case. So to close it, we do the opposite. We credit it. We're crediting expenses. And then, of course, we need a debit to balance out. So the debit would be to retain earnings. That brings over a debit to retain earnings. Now, dividends, even though they are not an expense, they have the same basic journal entry. They start with a debit, so we have to credit the dividends for that same amount to zero it out. So credit dividends, debit retain earnings to close it out. And then in the end, we're done with the closing entries. Now we just need to calculate retain earnings balance. We had $1,300 to begin with. We added $1,500 through the revenue closure. We subtracted $1,000 through the expense closure. We subtracted $200 due to the closure of dividends. Our ending balance of retained earnings is now $1,600. We are now closed. We can start the next period with zero balances where they need to be. We'll take a look and see what our net income is for the next period. All of our revenues and expenses for the next period. So this covers all of the closing entries. I hope this has helped to clarify this topic. I thank you for your time and look forward to talking to you in our next session.